Hey, so I've been a big fan of Avichal Garg's thoughtfulness for some time. But this is actually not the first podcast he's ever done or the first time he's spoken by any stretch. So my goal on this was to push him toward a topic that he wouldn't uniquely focus on. And I was drawn to scarcity. Now, we could be looking at an extended bear market here, and we often talk about the macro factors impacting crypto, but at the core of those macro factors is scarcity. And so I thought that scarcity and trying to apply it to the digital asset space, maybe it's time to look back at the roots because let's face it, a lot of where digital assets has come from is grounded in the notion that central monetary authorities would print their way into abundance and thus a more stable monetary form grounded in scarcity needed to emerge. So last year, this conversation might have been more philosophical than this year, but as the world competes with this very real notion of scarcity and its impact on economics, I thought this conversation was more important with regard to the future of digital asset. On the flip side, of course, very aggressive regulators might be more impactful still, but that's for other podcasts. So, at any rate, I hope you enjoy this episode with Avichal Garg, and I think you'll get a lot out of it. So, if you enjoy it, like it, share it. Numbers keep going up here. Let's just keep moving it forward, and people like it. So, I think if you share it, it'll be well received. So, thanks so much for your support. Welcome to The Encrypted Economy, a weekly podcast featuring discussions exploring the business, laws, regulation, security, and technologies relating to digital assets and data. I am Eric Hess, founder of Hess Legal Counsel. I've spent decades representing regulated exchanges, broker-dealers, investment advisors, and all matter of fintech companies for all things touching electronic trading with a focus on new and developing technologies. Okay, so we're kicking this off with Avichal Garg, founder of Electric Capital. This podcast has been a long time in the making. Very excited to have you on, Avichal. Welcome to the Encrypted Economy.
Thanks for having me.
I actually don't know that you need much in the way of introduction. There's people know who you are. They know your background. There's some really excellent podcasts that you've done that sort of go through a very interesting story. Maybe briefly summarized, but we're just looking to get right into it with you.
Yeah, totally. Quick deal TLDR. Spent most of my career as an entrepreneur. I was fortunate enough to start and sell two companies. Second one to Facebook. Was at Google for a brief time, and have spent the last several years full time in crypto. My co-founder Curtis and I left Facebook at the end of 20. I left at the end of 2016. He left in 2017, and we jumped into crypto. And we were initially thinking that we would start a company, and we ended up, I guess, in some form starting a company, which became Electric Capital. And we can talk about backstory if it's interesting. But yeah, these days we're one of the larger crypto VC firms. We just closed a $1 billion fundraise a few months ago. We invest in tokens, we invest in equity, primarily do seed and Series A, but every now and then we'll flex up to do something larger. And so we're fortunate to be involved with a number of the successful companies in the space. So things like Bitwise, which is the number one index provider in crypto, DYDX.
Which provided the introduction. We had Matt Hogan on the podcast.
That's right. Yeah, that's right. To a bunch of layer ones we were investing in back in 2018 in the series seeds of those things, to NFT things like Magic Eden, where we were investors in the Series A and just led the Series B. So yeah, so that's a little bit about what we do. And I think
Excellent.
maybe touching on we can talk about this too. I think potentially in the context of this conversation, but I really do think like crypto is eating money and crypto is eating capital markets, and so kind of the way we're trying to build Electric is very much through the lens of crypto is going to eat venture capital as well. And so most of our team is software engineers. We have two designers on staff. We don't have associates or principals. Kind of the way that we operate is like if I showed you the org chart of Electric, you'd say you wouldn't guess. Like if I showed you the org chart and you said what does this business do, you would not guess venture capital. You would actually say, oh, this looks like a software startup. And that's very much by design.
Yeah, I've gone through the Electric Capital site. It's really interesting, and like we're tracking where the developers go, and that's how you look at the space, and it's it does come across like is it a VC firm?
Yeah, that's what we're going for.
Yeah.
I don't,
Well achieved.
yeah. Well, so much of this, of the business that we have is you have to, it's, I don't know where I read it, so I can't take credit for it, but I thought it was brilliant. It's like venture is the only asset class where the asset picks the buyer, right? Like founders have to be convinced to take your money, and there's a lot of money sloshing around. Um, and so for founders, having somebody who doesn't look and talk and feel like a VC as the person giving you money is actually is like that. You need to like resonate, and that's usually it works really well on the founder side for us actually, and that we don't come across as VCs when we're working with founders and teams and companies. It actually, I think it worked against us on the fundraising side in the early days. It was like to people who give VC firms capital, we didn't look like VCs, and so I think it took us a while to kind of get the flywheel going. Though I mean, we've been very fortunate and successful on that front too, but sort of double-edged sword.
Yeah, I work a lot with early stage companies in the space, and sometimes it works better when you have a product that's going to get traction. But I always say there's money, and then there's money plus.
Mm,
Choose the partners that bring more than just money to
yeah,
the table,
yeah,
because money gets spent and it's not free. But
yeah,
something that's a multiplier, like your unique experience and
yeah,
your connections to the space can really
yeah.
be the exponential effect on the
Yeah.
capital. So.
Well, and values alignment, right? Do you ultimately want the same things, and do you value the same things, and so on? Yeah, there's a whole podcast you could do on how to pick the right person to take money from, which is so much more important in a bear market than in a bull market. It's just like the tailwinds will carry you, and you'll just raise your next round, and like there's just the momentum works in your favor, and in a down market, having picked the right people is to work with is that much more important, I think.
Yeah, 100% agree. So you've done a lot of podcasts which are which have been excellent. I mean, you're a thought leader in the space. So every time you listen to one of yours, it's like you really get like a different. You
I
take
appreciate
the
it.
snow globe and you twist it in a different way, and it's
Yeah.
just it's not the same riff. But we did decide to mix it up a bit today,
Hmm.
to sort of explore this concept of scarcity in the context of digital assets. So we'll just start out. What is it that makes a digital asset scarce?
That's a good question.
In the context of proof of work moving over, like for Ethereum moving over to proof of stake,
Yeah.
um, also resource scarcity and a lot of the
Mm,
debate around Bitcoin and whether or not there can ever be truly another Bitcoin, just because of
yeah.
all the debate around the resources consumed, and then thinking in terms of digital assets, not just uniqueness or even arguably utility, um, but scarcity that may also relate to utility. So it's not just like a digital gold concept, but
Yeah.
you know what drives the notion of digital scarcity.
Yeah, it's a really interesting question. There's sort of this notion of like things are valuable if they're scarce. Um, and so in some sense, like as an investor or as a founder, you're trying to create things that have some degree of scarcity to them. And that can come in a lot of different forms, right? That doesn't necessarily mean limited supply or limited access. Um, like trust is scarce, right? So the idea, and I think like Vitalik has written about similar concepts around like there are just limited resources in the world, and like credible neutrality is one of them. And so there are like a lot of various forms of this, and I think one of the things that's really interesting about what's happening in the digital universe right now with crypto is we're kind of exploring what are the true drivers of value? Like how do collections of humans, how do groups of humans all over the world actually imbue value into things? Um, and so I think it's sort of like to me when we're talking about scarcity, it's sort of like a proxy for value creation and value capture, um, because it's hard for things that are not scarce in some dimension to accrue value. Now that's not to say that again, it's not necessarily about limiting access. Like Apple is the most valuable company in the world, and they produce devices, and everybody can have an iPhone and a Mac, and like they have tremendous reach in terms of like availability of those things. Um, but they've just developed such brand value, and that's a scarce resource, right? Like the trust that goes into it, the sort of association, the sense of this is a high quality product. If it breaks, they'll fix it. If you're seen with it, there's like social status that sort of accrues to the brand, and you sort of signaling to other humans. Like that those are all like very difficult and valuable things to accrue around a brand, and that brand value is extremely scarce. Like you're not going to have that kind of brand affiliation with a lot of people. So anyway, it's a sort of like a roundabout answer, and in some sense, the answer to like what makes digital assets scarce, the answer kind of is we're trying to figure it out. And I think um, whether it's NFTs or cryptocurrencies, we're kind of playing with a lot of those levers. And I think the only real answer that we have right now is probably things that are fixed supply seem to be able to, you know, be perceived as more scarce. But I think there are other candidates in the mix right now. Like for example, block space is a limited resource and perhaps as a result is scarce and therefore potentially valuable. TBD. I mean, like with things like Celestia and modular blockchain architectures, like maybe you go from data availability, as a scarce resource to an abundant resource, and does that change value capture? I think is an open question, and we'll kind of figure that out. Or trust is a very scarce resource. Like who do you actually trust, and how does that trust get developed and strengthened over time? And so, you see these other non-Bitcoin, non-Ethereum L1s emerging, and and probably one of their most scarce resources there is trust. Like, will the community, will the ecosystem do the right thing? Will the chain stay up? Will there, what happens if it's a proof of work chain? Can it get 51% attacked? If it's a proof of stake chain, like, will there be malicious hard forks? Like, that those are just open questions, and until you hit those points of actually um, having to answer those questions, you don't actually have trust. Like you have sort of the potential for trust, but only after you've done those things and had those hard decisions and hard conversations do you actually build trust. So trust, I think, is extremely scarce right now. There are like not that many ecosystems that I think are truly trustworthy. Um, in the NFT ecosystem, I think there's a whole different set of explorations happening around what it means to be scarce. Does that happen, for example, through who holds your thing? This is like very common in the art world. Like a lot of what you end up having to do as an artist is make sure your art is held by the right people, and in return for it being held by the right people, there's an element of brand accrual and scarcity that develops because there are only so many people um, who can sort of have that kind of affiliation. Um, and so, but I think like what's interesting, it's kind of by analogy, I think like one of the really interesting things about what's happening with L1s and DeFi is we can run like economic experiments at scale and game theory incentivized experiments with real dollars at scale and run 1,000 of those experiments in parallel. Whereas like 20 years ago, you might have an economist and a mathematician sit down and write some paper about theoretically how might a thing work, and then you do some like multi-agent simulation in software. And now you can do it with real humans and real dollars. And so the search space for what's possible all of a sudden just explodes because people can try a bunch of experiments, and then we'll kind of see what happens in the real world. And so in some sense, I think for things like brand and trust and scarcity and value accrual and like how do humans decide what's valuable, we're kind of running 1,000 experiments in parallel. And we'll kind of see after 5 years which of these things actually captured value and why, which I think is just kind of fascinating because that doesn't happen that often. It's like you have to invent an entirely new form of value capture for that to
Right.
to be possible.
I agree with that. It's a unique time. When we think about scarcity, like I guess the OG on scarcity and digital assets would be Bitcoin. Would you?
Yeah.
And
Yeah, absolutely.
and and do you think it's ever possible to have another Bitcoin with the same scarcity? Like, because it seems like it would be hard for another system to ever reach that same level. First of all, proof of work is
Yeah.
being shifted away from. But what are your
Yeah.
thoughts on you know what Bitcoin accomplished with proof of work? What other candidates could potentially ever accomplish the same? Tied to scarcity, because I mean, certainly
Yeah.
viewed as digital gold now. Just
Yeah. Yeah, I think there's like two dimensions to that. So one is the notion of proof of work driven scarcity, which I think is pretty interesting, right? And I think there's a whole debate you could have about the proof of work versus proof of stake, fairness, like attack vectors, like which one's actually truly more scarce, which one's actually truly more democratic and accessible. And those are interesting discussions to have. In some sense, I think as long as both are sufficiently good at fairness and distribution and security and so on, like they both have a shot in like a pragmatic sense, like not non-theoretical, non-maximalist sense. Um, and I think in that dimension, actually, there could be variations of scarcity and fairness and exploration that are interesting. So, for example, like I think proof of space time, we're using hard disk space instead of CPU to drive proof of work is potentially very, very interesting. And allowing people to participate using their hard drives and making that system much, much more distributed and accessible, you might that might be the closest to sort of the initial Bitcoin launch in terms of like sense of fairness. Like anybody can participate and it is open in that way. And so you might be able to get close to recreating something like the Bitcoin origin story on that dimension. Now, of course, the dimension on which it's near impossible is it was the first thing that actually kind of worked. And so
Right.
Satoshi, like proving that this might actually be possible and putting it out in the wild and so on and so on, and then being anonymous and then disappearing and
Yeah.
that's not going to get recreated. Like that origin story is unique and special. Um, but it's not clear to me that that necessarily needs to. I mean, I think there's a lot right with it. It's religious in a lot of ways, right? Like by like actually not making it about himself or herself or themselves, like stepping away. There's a lot of sort of like religiousness to it. It's not clear to me that you necessarily need that. Like like if you look at Ethereum's origin story, this was one of the criticisms of Ethereum in the early days is just like, why will people ever trust this thing? It feels so centralized. They're like they're actual founders, you know who they are. If the founder said something, when Vitalik says something, doesn't it just sway the community dramatically? It doesn't have undue influence over this thing, and therefore, like, how can it ever be decentralized, and so on and so on. And yet here we are. Like, I think actually Vitalik and the Ethereum Foundation have done an excellent job of essentially removing themselves from the center of that, and having far less influence and say over actually what's happening these days. And in terms of just looking at who's writing the code for ETH2 and how's that getting decided, and it's really really messy and slow, but it's pretty remarkable that it's working. And so it's not clear to me that you actually necessarily need a Satoshi like Messiah like figure to make the thing work. And so back to this idea of maybe there maybe there are actually 10 or 15 or 20 different kinds of origin stories for projects. And now that we have opened up the search space digitally for people to create in a new way where anybody in the world can participate, it could be, pseudonymous or anonymous, anybody can just write and ship code. Um, Maybe the like number and types of origin stories for founding projects that people will want to use is actually more varied than we'd ever expected. And now we have like the canvas to actually try that out, whereas it just wasn't possible to do that 10 years ago. Like, in 2012-ish, let's say, like you could either do what Satoshi did, like write some code and put it out there and, it kind of like open source style, or you could come to Silicon Valley and try to raise a round, and that was kind of it. Those are like your two options. And now we just have, so many more options about how you could actually build and ship a thing, which I think crypto has pioneered and enabled. And so that makes me think that there's probably a dozen different types of origin stories that then might be able to bootstrap into some new form of scarcity that we just haven't even tried yet.
Yeah, and you talked about storage space before or hard drive, and is that kind of cutting back to, um, you know, block space, or are you thinking even more expansively than block space?
Yeah, even more expansively. So in the specific case that I'm thinking about is I was talking to the guys over at Space Mesh, and where Electric is an investor, and Chia has also done this. Bram Cohen. Bram was one of the creators. He created the BitTorrent protocol, like 15 plus years ago. So like one of the OGs of true peer-to-peer distributed systems kind of thinking. And the idea there is, I mean, if you think about what really is like CPU-based proof of work, in some sense, you're just running a lottery. And what you're saying is like, there's this hash, and you have to solve the puzzle, but the solution is effectively random. And so what you just need to do is start guessing. And so it's just sort of it's a lottery system basically. You have a 1/n chance of winning the lottery in any given 10-minute cycle in proportion to the amount of the network that you own. And so the thought with something like proof of space time is, well, rather than using a CPU, can you use your hard drive? Can you essentially commit a gigabyte to the network or a terabyte or a petabyte or whatever, and that's your lottery tickets, right? And so your probability of winning the lottery and being selected to be the next block producer is proportional to the amount of hard drive space that you've committed relative to the overall size of the network. So it's not block space, or it's not like IPFS with Filecoin where it's a useful form of storage. It's effectively useless file storage, but the file storage is being used essentially to conduct this lottery, and And the lottery then is how you pick a block producer. But the sort of side effect of doing it this way is, of course, hard drives are far more energy efficient than running CPUs, and in theory at least, and they're constrained in other ways, like you have to have bandwidth and internet connectivity and so on. But um, in practice, in theory and potentially in practice, we'll see, but in theory at least, this should make it much more accessible for the average person. Like you don't have, you can just, you in theory could run it off your hard drive on your laptop, which is a pretty, probably a lot of people watching this or listening to this are sitting on pretty powerful SSDs inside their computers. Um, and a lot, they're probably sitting on several tens of gigabytes maybe that are totally unused. And it does create wear and tear on your hard drive. It does, have additional electricity costs. It does have bandwidth costs. Like there, it's not free. But the argument is it's far more cost effective. It's far more green, energy efficient, and far more accessible than CPU based proof of work. Um, and so maybe that's more fair. And in some sense, that fairness, because it feels more fair to people, that develops trust. And trust is a very scarce resource, right? So that's sort of back to this idea of like bootstrapping value, like through accessibility and through fairness, you might be able to build trust. And if you build trust, you've acquired something that's very scarce. And because you've acquired something that's very scarce, you've actually created something of value.
That's really interesting. Have to look more into that. So, do you think
It's
we're moving?
it's the
What?
coolest thing, by the way. Like
It
literally,
is the
because
coolest thing. I'm like, God, I
yeah,
gotta, as soon as I get home, I'll be like diving into this. So,
yeah, it's super cool because I mean, if you think about, um, there's actually, I mean, there are a couple folks like I think Bram has done some cutting edge research in this. There's a guy named Ido Bentov and Tal Moran. Ido and Tal are they're professors of computer science in Israel, and uh, and so there's a lot of cryptography that goes behind. Like, how do you prove that somebody stored a gigabyte of space on their hard drive for 10 minutes? And so, like, cryptographically being able to prove that that was actually the case. So it's not like right before the lottery runs, I allocate 10 gigabytes of space, I get my lottery tickets, and then I reallocate them, and I take that space back and use it for my own hard drive, right? Like, there are actually some like very hard computer science problems here and cryptography problems in terms of how you do this. So the reason I get a kick out of it, that's amazing, like technology and cryptography. But the other thing that I think is so funny about it is what that means is literally, Ito and Tal are like the creators of space-time because they invented the proof of space-time, which I think is like the coolest. That's like the funniest thing, right? There's like two guys that created space-time, which is all the technology that underpins this. Sorry, I cut you off, but I just think that's like
no,
so fascinating that they did
it
that.
and it's funny because like I'm listening to it, and like the first thing that goes off in my mind is that like this sounds crazy, right?
Yeah,
And then the next thing that goes off in my mind is like, wouldn't I have thought that Bitcoin was crazy the first time I heard of it,
yeah,
right? And then all of a sudden
yeah,
you're
totally.
like, actually, it doesn't sound crazy at all, right?
Yeah,
Because
yeah,
mining is very resource intensive. Like the biggest Bitcoin
correct,
miners out there, and hard drive would be resource intensive, but it wouldn't be as energy intensive, and that's a
correct.
yeah.
Correct.
So
Well, and back to this idea of like bootstrapping, ultimately, creating something of value, and many things that are scarce are valuable because they're scarce, and trust is a scarce resource. And fairness is, I think, is a driver to trust. I mean, these are very abstract concepts, but there's sort of like a chain of connectivity there. One of the things that's really interesting about hard drive space too is the supply chains for it and the distribution of ownership is far more distributed than like an S19, right? Like these ASICs from a relatively small number of producers and a relatively small number of fabs, and like how many companies actually create the ASICs for this. And the thing is, like in the hard drive market, like Seagate or Western Digital or Samsung, like there are these mega companies that make all this solid state hard drives, and they ship them for phones and computers and servers and all over the world, right? And so those supply chains are actually very robust. They're very distributed. There are lots of suppliers, but as importantly, if you could create an ASIC equivalent here, quote unquote ASIC for the hard drive, well, like you would want to put that in every phone in the world. Like you wouldn't just want to use it for this, right? So like the incentive structure, there isn't an incentive structure, I think, quite in the same way that there was for Bitcoin mining with CPU-based proof of work, which is like just a natural progression of it leads it to becoming an ASIC. Here, like if like the market forces push you in that direction, well, that's just going to get put into every phone, or that's going to get put into every laptop, right? Like when you make the storage more efficient and more dense and faster recall, like all of those things, you should just put that in every computer in the world. It's not there. So like you would imagine that this space has a much harder time becoming ASICified, so to speak. because every hard drive should just be able to participate.
Right. Interesting. So proof of time space, because one of the questions is like, when we talk about scarcity, what are
Yeah,
some of the other proof concepts that leverage that concept of scarcity?
yeah,
Certainly, you can argue that proof of stake has some element of it. Certainly not
yeah.
to the same extent that proof of work does. But so while we're on it, what other proof of concepts are out there that endeavor to leverage the concept of scarcity?
Yeah, well, another one, it's sort of a loose category of things, but I think there's been a lot of interesting experimentation around now is essentially some sort of proof of reputation, right? Like you've done a thing, and there's no substitute for having done the thing, and that might be like a POAP where you went to an event and it's just like you were physically there, or it might be that you've lent a certain amount of money into a DeFi protocol, or it might be that you've held on to a certain token, like so you're essentially diamond handing it, and people are sort of playing around with variations of this. A lot of the gauge voting and vote escrow lockups kind of get into this universe. Is like, are you willing to commit to an extra 2 year lockup on your token? And you're committing you're not going to sell your token, and that expression of I'm committed right now. The reward function is essentially you get more governance power, which is quite valuable, obviously. But you could imagine that like the history of that and the record of that is your reputation essentially on chain, right? Are you a good actor? Are you a long-term actor? Are you long-term minded? And so there's sort of like a proof of reputation that you can build over time through your actions, which I think is it's as a VC we kind of traffic in reputation. That's effectively our business. That's our scarce resource, right? Like over an extended period of time, if we do all of the right things, we establish our reputations, and of course, ultimately, hopefully, that leads to successful outcomes. But how you did it matters as much as what you did, and so that's one I'm particularly sensitive to. I think we're gonna bootstrap entirely new forms of reputation here, and I think when you start intersecting these ideas of reputation with the novelties of this space, I think it's really kind of wild. Like, can software have a reputation? Right? It's kind of like an interesting thought, and it's a lot of these. Like I think when crypto and AI start to intersect, and you have intelligent agents or semi-intelligent agents with some objective function, um, and they have a history of having performed a certain set of actions, and if they're of a certain orientation, like they're generally long-term minded and trying to have a certain objective function, like that thing has a reputation. But that's kind of like a funny sentence, right? To say that a computer program has a reputation. Um, or, like, can collections of people have reputations? Or, when you start intersecting these ideas, I think with, anonymity and pseudonymous accounts, you can actually have multiple accounts. You can actually have multiple reputations, right? In one context, you could have a reputation as essentially a long-term minded, diamond-handed VC, and on the other one you're a total degen, right? And so you can actually, as a human, even you can imagine like you could have multiple reputations, which is not something you could really realistically do today because everything is fundamentally tied to like the one identity that you have. So I think the surface area even for reputation all of a sudden when you take it fully digital explodes into like entities that previously did not have a reputation all of a sudden may have a reputation, and entities that did have a reputation might now have multiple reputations. So sort of like the surface area for what does it even mean to have a reputation? You just sort of like blew up here in a really interesting way.
And does that actually make the communities themselves? I mean, an individual either if I have a bad reputation or I have no
Mhm.
reputation, I have to acquire a reputation. So
Yeah,
that's just something I have to build, and if I build
yeah,
it, it's unique to me. But if I'm
yeah,
trying to acquire, like in the sense of a community,
yeah,
how do I become part of a community that has that reputation? And presumably that community has to be somewhat gated. I wouldn't say
yeah,
exclusive like a country club, but it has to be like crypto gated, right? So
yeah,
that you have good actors in there. Do those communities that have that unique reputation now become sort of a scarce resource? Like, for example, Board Apes Yacht Club, there's an
yeah,
OG element to that. There's, if you're part of that club, it's more than just even holding the OG CryptoPunks, because
hmm,
the CryptoPunk doesn't have a community, or some people would say
yeah,
now Yugi Labs maybe it is, but it didn't have a community. It had the OG status, but it didn't have a
yeah,
community the same way that Board Apes Yacht Club did. So does that
yeah.
does that reputation of the Board Apes Yacht Club become the scarce resource that drives the value of people wanting to own it, not just because it's a CryptoPunk and it gives them cred, but because it gives them cred, I guess, it, how should I say, it shows off wealth, right? Like I
Yeah,
have
yeah,
a,
totally.
right. So
Yeah,
but, but,
yeah, absolutely.
but that doesn't necessarily translate into reputation or trust, but it does potentially translate into credibility in terms of your longevity in the space and your dedication to the space. Is
Yeah. Yeah,
I
a
just want
couple
to
things to
thoughts on
unpack
that.
there, right? Yeah, there's a couple things, interesting dimensions to unpack there. So one, I think what that's getting at is like, reputation at a collection level or community level in some sense is brand. Right? And like reputation and brand, I think, are somewhat interchangeable. And so um, that is absolutely a phenomenon. I think different communities will effectively intentionally or unintentionally develop their brands. And then you get sort of like a Darwinian thing, which is like different communities that are uniquely good fits for certain types of people and certain types of distribution channels and certain environments and like how they make money and all these kinds of things. I think you'll just get a natural explosion of it. And sort of back to this idea, I mean, I think one of the really, really fun and interesting things about crypto is because everything is digital, the rate of evolution is much, much faster. So if you sort of take like a Darwinian take on it, it's just like, in the offline world, think about how long it takes to build a brand. And how long it takes to reach, millions of users and get them to just be aware of who you are and then reestablish communication with them and really build your brand. And you can do that very, very quickly in a purely digital context. And so what I would actually imagine is you not only will you get sort of an explosion of purely digital brands, um, but you'll get a new set of varieties of brands and sub segmentations of communities that we just never seen before. Because now all of a sudden it's possible to find just like Reddit did with subreddits. There are all these random subreddits you stumble into, and you're like, wow, I can't believe there's a million people over here. Like that's crazy. Like this is a whole thing I never even knew existed, and there's just a million people sitting in a corner of the internet. Um, and now that you can put like NFTs or money or DAOs and the ability to coordinate resources, around those things, around those communities, like it feels natural to me that sort of like these brands will emerge around these communities because they'll have monetary power and they'll have like resources that they can coordinate through crypto. And so just like the number of brands and the variation of brands, I think will like dramatically increase. And then there's another thing that you said there that I think it does sort of touch on this idea of there with a lot of these brands, like there's going to be some value and reputation in being a curator of culture. And so if you're somebody that finds these things early, that's a new form, that's a type of reputation, and all of a sudden that's like another type of reputation that people can accrue. And then there's what you definitely see in the offline world, and something you said there, I just want to pull on that thread. I think is interesting is there are always going to be people that see these brands and then draft on the brands, right? And so like Rolex or Patek. This is sort of the example that I use with watches. I don't know if we've talked about this before, but you take something like a Patek and it's like, well, why are you buying the Patek? Like for most people, I would say maybe half of the people, it's like they actually genuinely appreciate the art and they're like, wow, this is a masterful tool. And like, I can't believe humans can do these things that robots can't do and like the precision of the machinery and so on and so on. And half of it is, hey, I can spend $250,000 or $500,000 on a watch. I can put it on my wrist, and then I can demonstrate to all of these other people and accrue social capital. And so if you're a banker or if you're a financial services CEO, like you might want to put one of those on. And really, what you're signaling to your potential clients or your customers or your social circles is, I'm successful. And that's just a social fitness function thing, right? Like humans are we're just primates that need to signal to each other socially in this way to say I'm successful. Um, and I think you're seeing that behavior on steroids with NFTs. But I actually think it's on a dollar basis is a pretty rational behavior. And so the example I always use is with a Patek you might spend $250,000, you put it on your wrist, and at the end of the day, like how many people are going to see it, right? In your life, maybe 10,000 people are going to see it and recognize it. And so what did you pay? You paid like $2.50 for an impression, somewhere between 1,000 and 10,000 people. But if you buy a $250,000 Bored Ape and you put it up in your Twitter profile, millions of people might see it, right? And that's like pennies per impression. Basically, it's 2.5 cents per impression instead of $2.50. So it's literally 100x better from like a social signaling perspective. If the purpose of what you're trying to do is signal that you're extremely successful and you have $200,000 to blow on some asset purely to socially signal, right? So actually, I think like a lot of these behaviors, there is like an analog equivalent. Like humans already do this, and then the digital version of it is just now all of a sudden 2 billion people will do it. And actually, in many cases, the digital version it seems kind of crazy at first glance, but if you look at it through the lens of well, humans already do these sort of crazy things in the offline world, And it's actually 100x more efficient on the digital version of it. That makes me think that actually all of this activity that's happening in the offline world will just happen 100x more in the online world.
Interesting. And I guess maybe another way of sort of taking the snow globe on this one and switching it around a little bit is, and I think about this honestly, like, the NFTs have this social signaling component of it. And some people, like myself on some level, really don't care.
Yeah,
It's, whether I own and anybody can take a rifle and shoot me for this. Well, actually, I wouldn't welcome it, but like, I don't see that it doesn't like spending that kind of money on a Bored Ape. If I can turn money, if I can make money on it long term, phenomenal.
sure.
If somebody says, "Wow, you're the greatest guy ever because you own a Bored Ape," not so meaningful. It doesn't like that additional social status doesn't do it for me because
Yeah.
I, like you, Avishal, we're men of the mind, right? Right. So,
Yeah,
like having just saying, "Hey, you got social credit," be like, "Yeah, well,
yeah,
whatever, that's great."
yeah,
I kind of don't want social credit. I want kind of like I want my intellectual capacity to be,
sure.
that is more credible because that allows me to interact with other people who have, I enjoy that.
Totally.
I get off on that intellectual stimulation. Having said
Yeah,
that, you know, so I'm actually going to a direction on this. For example, like I'm a DeSci, right?
yeah,
Like if you get involved in sort of a science project, right?
yeah,
Let's just say that you fund a project, you're part of a working group, you're affiliated with some sort of invention, some sort of
mhm,
phenomenon that's scientific, that involves a lot of like-minded people that are trying to solve problems. That's a cred in and of itself. It's also a
yeah,
cred that potentially helps you in future things because now you're seen as a contributor, right?
sure.
And so that's part of one of the things that you're talking about. Moving away. Like, how do we move away? And I don't mean like moving away, like leaving it behind, but how do we move away in terms of breaking down the different components of that reputation and narrowing it? Because right now it's very focused on sort of more of leveraging media, leveraging likes, leveraging
Mhm.
like status symbols, that social status. How does it move toward like more toward professional status or even I'll just say intellectual status? Do you
Yeah.
see that as something happening or you think it's just too difficult, to try to connect the dots on that?
Um, no, I don't think it's too difficult. I think most people just don't care. Um, and it's just sort of like I mean, just look at popular media consumption. It's like it's sort of if you talk to nobody really watches TV anymore, but it's kind of like 20 years ago, if you talk to a bunch of people and you're like, hey, do you watch PBS? Probably 60 or 70% of people said, yeah, of course I watch PBS. That's where I get my news. And then if you look at what they actually watch, they're actually watching, like the Kardashians, right? And so like the reality is, um, this sort of like the highbrow intellectualism is like it appeals to, let's say, 10, 20, 30% of the population. Um, and in some sense, all of the other stuff appeals to 100% of the population, right? It's like even the people who are highbrow want the other stuff too. And so from a TAM perspective, what you get are all the other stuff is just a much bigger TAM. So I think like the DeSci stuff is super interesting, and we've invested in some stuff like roughly in that direction because I do think as like a form of capital formation, being able to give money to people that are doing certain kinds of things or empowering individuals to be able to participate in the health and science industries, and those are massive industries, right? Healthcare and scientific discovery and pharmaceuticals, and like there are billions and billions and billions of dollars that are being created there, and people should be able to participate in that value creation. Um, but I suspect at the end of the day, it's not where most people's heads are. It's where 10% of the population's heads are about utility. In some sense, like like these intellectual pursuits or these headier things, I think are clearly very valuable, and they appeal to a certain segment of the population. But I think like fun and games and entertainment are also a form of utility, and that appeals to all humans. And so almost by definition, the TAM there is much much larger. And so things like video games or even the idea of collecting things or speculating. I mean, speculation is just a game. Like people are just playing a real money game. Um, and that's fun and that entertainment value. There's utility in the entertainment value, I think. Um, and so yeah, I tend to think it's just like the DeSci stuff will definitely happen, and I think it'll be transformative as it does happen over the next decade. And sort of just like cutting out all the intermediaries. in terms of all, how research happens and how science funding happens and how drugs are discovered and all of these things. That'll be great. Um, but I suspect it'll be a much smaller percentage of the market in perpetuity versus sort of social signaling.
Right.
Um,
Well, so shifting gears maybe a little bit to games.
sure.
So in game environments, and I'll go there and use a term, use metaverse, although what that exactly is in different contexts is still
Mm.
to a large extent being defined, right?
Yeah, TBD. Yeah.
Um, but a lot of the games that are being created today are based on this concept of scarcity.
Yeah.
That the gamification, you try to get something, it's hard to get. By definition, if it's hard to get, you want to get it more, and there's ways to
Yeah.
tease you to create the kind of behaviors where you come back. Do you see like that kind of scarcity being a major value driver and incentive in the future? Or I've also heard like different I think what like Nor is one of them, where they say, listen, we're not trying to create metaverses where it's all based on this notion of scarcity and gamification, but people just do it because it's fun.
Mm.
It's not just play to earn; it's
Yeah.
play to enjoy,
Yeah.
as well as if you're serious, earn. Like, how do you think that evolves? Like, have you given a thought to like the value of manufactured scarcity in those types of environments, and how they might evolve?
Yeah. I've thought about it too deeply, but I go back to this idea of like, a couple of like higher level observations and stuff that we're seeing. So I do think games are going to be really interesting here, in sort of crypto land. It's one of the few things, like as the bear market has happened, it's one of the few things where the volume of pitches that we get has not changed. Like the games subsector inside Web3 is very, very, very much alive. And the caliber of people going into it is phenomenal. It's everybody from independent game developers to, you know, 22-year-olds in Eastern Europe who are like, hey, this might be like the new App Store, to people coming out of like Tencent and Epic Games, like, triple A, these games take 50, $100 million to make. Those teams are spinning out to create blockchain-based games. So kind of back this sort of recurring theme, I think the degree of exploration that we're seeing and sort of the surface area for exploration here is so broad, that almost certainly really, really surprising and interesting things are going to happen because just the caliber of developers that we see exploring, is just so high, and the surface area to be explored is so large that I think people are going to stumble into some really interesting things. And then when you think about it from the dimension of scarcity, I think my sense is it'll pull in two directions, which are polar opposite. One is the idea of true scarcity. Now you have sort of programmatic scarcity. Like you can actually prove cryptographically that there are only X of a certain item. Um, and I don't know if we know what the implications of that are. Because if that's set in stone, it does sort of create some interesting. One of the interesting things with games is you can tweak the game economics, and you can tweak the gameplay. Like, if the card is too powerful, you can undo it. What does it mean if you can't undo it, right? What does that mean? And I think the second order effects of that will be really, really interesting. Like if you have certain in-game items and they're NFTs, can you import them into other games, and do game developers start getting really smart about, like it reminds me of quadratic voting, if you know that term, where it's sort of like
Right.
if like the person coming into your game is too powerful, you don't want them to just come in and dominate your game and not have to play your game. But you do want to encourage them to come in, and so maybe there's some sort of quadratic decay where the most powerful items don't translate to the most powerful items, but there is an incentive for a bunch of people to come over into your game. So this idea of like in-game items with true scarcity plus interoperability across games, I think is going to be like a whole set of exploration. And then I kind of wonder if the extreme other dimension gets really, really interesting, is like, um, like part of what is interesting about the digital world is that it's not scarce. And so it's actually extremely abundant. Um, and so what does that mean? Like, what does it mean if anybody can create a game and it all sort of is interoperable and you end up with a million different games? Um, and I just don't know what that means, and I don't know like how we behave in that world, because historically, like for example, like with the game platforms and consoles, whether you're talking iPhone or console games or social games, there was an element of scarcity, right? Like it was, there were a lot of games, but the platforms for discovery and playing those games were, and discovering those games was actually quite limited. And so, when you have anybody can publish a game here and anybody can interop with another game and you get sort of like an explosion of APIs and interoperability there. I don't know what happens there. It's sort of like the opposite of scarcity. And so I think you get like extreme abundance. Um, and I don't know what that does to like psychology. Like, I don't know how sort of game players and how money moves in those worlds. And I think there's going to be a whole sort of second order effect around just the abundance that comes from the sheer number of games and gameplay and in-game items and interoperability. I think creates a whole different level of complexity too.
It's interesting. I mean, if you think about, I think TV might actually have some analogies there, like because,
Yeah.
when I was growing up, you would turn the channel and it would click every time. Like my house couldn't even afford cable, so
Ooh,
I had like 13 channels or what have
yeah.
you, if that, and and we probably watched more TV, and then today, and then we went through a period like everybody was just like 300 channels of garbage, right? Or 500 channels of garbage. Like there was so much, you didn't even care.
Yeah.
But then I think something interesting happened is like you have Netflix and Prime and Hulu or what have you. And all of a sudden, like everything, the standards for all of it just increase so dramatically. Like if like people who enjoy
Yeah.
old movies these days, they enjoy it because it has some element of nostalgia. They could be well-made movies, all that good
Mhm.
stuff, but the quality of the series done like
Yeah.
on shows today is so much higher. Like there's
Yeah,
just so
totally.
much more that goes into it, so much more thoughtful. They get a lot more real time. It's a science, and
Yeah.
they have a lot more chances to experiment. So as a result, things that may have previously gone in play, like your sitcom with the canned laughter, nobody's
Yeah.
like maybe that's come up again for nostalgia, but people aren't like watching like old sitcoms with laughter generally, except for a
Yep.
sense of nostalgia.
Yep.
So maybe it's the same thing with games, is that over time there's so much, but it'll the cream of the crop will rise and it'll create new
Yeah.
standards, and
Yeah.
future games will stand on the shoulders of giants.
Yeah, totally. Yeah, I mean, there's definitely a market observation here, right? There's like the expansion and contraction of markets. It's sort of like, that old uh what is it, Jim Barcel quote? There's only two ways to make money, bundling and unbundling, and it's sort of a consequence, I think, of markets, right? And so like as you
Yeah.
get the explosion in games, you'll need some form of bundling and then unbundling. And so, I think that's absolutely true. And then I think, yeah, that there's this other element of extreme abundance, which is what the internet has shown is like over time, because of the power law nature of these things, like YouTube is another good example. The production value of YouTube videos has just gone so high in the last 5 years compared to the first 10 years of YouTube. Um, and it's very apparent, right? Like these things that are, used to be one person, filming themselves on some iPhone 4 or something. It's just the production value of some of these things to really break out. It's just so high. It's like these are professionals. It's not amateurs anymore. Um, and so yeah, you see that sort of natural in a zone of abundance, extreme abundance, like the bar that you have to cross to really get noticed keeps going up and up and up. And so yeah, probably something very similar happens here. Like part of it is like in any individual game there might be scarcity, but like at the market level there's extreme abundance. And how those two interplay with each other, I think, is a big TBD.
um, I guess obviously the last few months a lot more focus on inflation,
Hmm.
and that's real world inflation, that's resource,
Yeah,
that's energy, that's food.
yeah,
How beyond just the fact that okay, maybe Bitcoin, maybe not Bitcoin is an inflationary hedge, and that has to play out. So I'm not looking for a prediction there.
yeah.
How does like real world inflation, particularly around scarce physical resources, drive the narrative of what's scarce in the digital asset space, or change
That's
it? Like, what are the implications for that?
that's a good question. I don't know. I haven't thought about that too much. I mean, the way I've been thinking about it, which is a little bit indirect, is there's this great writer, David Foster Wallace, and he gave a great commencement speech in the early 2000s at Kenyon College, and he tells I'm going to butcher the parallel. I don't remember the specifics. It's a great speech. It's about challenging authority and assumption and so on. But the rough parable is something like an old fish is swimming by two young fish, and the older fish nods to the two young fish and says, "Hey boys, how's the water today?" And the two young fish that are swimming by nod back to the older fish and say, they just sort of nod, and then they keep swimming downstream. And after a while, one young fish turns to the other young fish and says, "Hey, what's water?" And I think it's a great story because like seeing the water is kind of what it means to have experience and wisdom and insight. Um, and I think one of the interesting things about inflation is I think for Americans, it's starting to expose the notion of scarcity. Like we've lived in a world where everything was denominated in US dollars. And so in a sense, we were insulated for the last 20, 30, 40 years, really since the 70s. America has been insulated from this concept of scarcity because we've lived in a world of abundance. Like the economy worked, everything was growing, like things got better and better. 2001 was not great, 2008 wasn't great, but even if you look at just like the last 15 years post global financial crisis, because of the subtle dynamic of inflation, plus the fact that everything in the world is denominated in US dollars, Americans by and large were not really exposed to this idea of scarcity. We just lived in a world of abundance and everything is denominated in dollars. And so, as far as Americans were concerned, everything's hunky dory. Meanwhile, in the rest of the world, everything is sort of doubly denominated. It's like your local currency and dollars because international trade is denominated that way, like oil is denominated that way, like debt is denominated, in dollars. And so a lot of the world actually has to understand scarcity because their currency is shifting relative to the dollar, and so the price of goods and services and things is actually changing in a way that the rest of the world is internalized. Like you go talk to somebody in Brazil or India or Argentina or Turkey, and they really understand this stuff because they have to. Um, and so I think one of the second order effects of inflation here I think is going to be that in a lot of these Western democracies, basically the Eurozone, the United States, you might put Japan in there because the yen has been relatively stable and good for 20 years, despite stagflation and all that stuff. But I think a lot of these markets are now waking up to the idea of scarcity because all of a sudden goods and services are becoming in a way that's very tangible, far more expensive, and they're starting to realize that oil is actually kind of scarce, or commodities are actually scarce, or I can't get timber because the supply chain is busted, so I can't, I actually can't build my house. Like I have some uncertainty there, or I can't do that renovation, or I can't, all of a sudden like the supply chain stuff is hitting too. So I don't know what the consequences are as sort of like society internalizes that in North America and Europe um, and Australia and Japan, like places where historically for the last let's say 15 to 20 years you haven't really had to think about scarcity, and now we have to, because I mean by and large if you look at the demographics that's a lot of people, right? There's a lot of people who let's say if you're 40 and under, that basically means like your entire adult life you didn't have to think about this notion of scarcity in some sense, right? From a like an economic perspective, you obviously did in other forms, right? Like people have personal scarcities and they have budgets and you have so on and so on. But I think this is just like a new form of tension at a society level where all of a sudden we're realizing like, oh, okay, well there just may not be enough copper to go around. Like what does that mean? There just may not be enough timber to go around. What does that mean? And how do we think about this? And I think we're just starting to get our heads around what that is. My sense is if it's anything like what has happened in other markets, Lebanon, Turkey, Brazil, Argentina, um, what happens is in the collective psyche, as soon as you realize that, you place a premium on things that are scarce and that you can acquire that can't be inflated away. Which is why I think if you look at the history of things like Bitcoin, so many of the early Bitcoiners were people who came from these worlds and from these markets or who had experience in these markets. Like you look at Wences Caceres, the founder of Zappo, and why did he get it? It's, you look at his personal history, you look at Mickey Malka, who started Ribbit. I mean, even if you look at, I think Brian Armstrong, who started Coinbase, part of the reason he did Coinbase was he was, I believe, in Argentina. Like he was doing like a study abroad in college or something, and he spent some time in Argentina, and so then he got it, right? He was like, oh, this is actually a thing. And so exposure to scarcity in the real world, like sort of, I think, sets your brain up to understand the value of scarce assets that can't be inflated away and so on. And so, but it's a little bit subtle. So I think it'll be interesting to see is like as societies around the world that have historically not had to deal with scarcity start to have to deal with scarcity. I would not be surprised if they then start to place a premium on things that they can control that are scarce, that are therefore valuable, that can't be inflated away.
Yeah, I mean, when I think about it, I think there's like sort of two areas. Like one that stands out is just this whole debate around Bitcoin and um, the use of renewable resources like solar or water or off grid, all these things. All of a sudden, you hear a narrative saying, "Well, hold it. Yeah, sure, you're creating better utilization of renewable resources, but hey, couldn't that be used for something else?" And it's
Yeah.
like, yeah, but it's the economics that drive the use of that to begin with. But
Yeah.
suddenly, like, it's a perverse narrative. But the fact that it's even being raised is sort of indicative of the type of, inflationary arguments like, hey, energy is scarce. What uses a
Yeah.
lot of energy that we can pick on? Oh, Bitcoin, right?
Yeah.
Um, that's one. The other thing is, in the context of the digital asset space, where scarcity isn't necessarily influenced as much by a supply constraint, except for block space.
Hmm.
Um, you know, Inflation has sort of, doesn't really have the same meaning. Inflation is driven by sort of, you know, by a perception, by a, you said, trust is scarce,
Yeah.
but it doesn't have the same exogenous factors that are driving that scarcity.
Yeah. Yeah, it's an interesting observation. I mean, yeah, like what happens in a world here is something we think about from like a value capture perspective is, um, as the world on the L1s, as data availability happens, and therefore, block space becomes far less scarce, and as zero knowledge proofs happen, both for, roll up purposes, but potentially like snarking up the chain itself, all of a sudden the computational barriers, like the cost to running transactions on a per transaction basis, also collapses. And so, like throughput and block space and computational power no longer being the constraints, you sort of start to wonder, well, if those are not constraints and therefore not, those things are not scarce, how does the L1 actually capture value? Because if there's an element of scarcity and there's only abundance, and the data layer is abundant, you can do a million transactions a second. Everything's a ZK roll up, and roll ups settle out to roll ups, which settle out to the L1. Like you just get tremendous abundance. And so does that mean actually that there's very little value capture? It's sort of a little bit of an open question. And one of the things we come back to is this element of trust. And so there may actually, like, I wouldn't be surprised if we look back in 10 years and we realize that yes, these things as computational networks and payment networks and so on have tremendous throughput. And so looking at it through the lens of a computational network, it's not that valuable, but the real value is in the trust. And people place such a tremendous premium on the reliability and the resilience and the fact that these things have been around for 15 or 20 years that they're willing to pay a very, very significant premium above the cost of the computational cost of running the network in order to have access to the network. And that trust premium essentially is like where the value capture really is. And so it would be, potentially impossible in 10 years for somebody to recreate something like an Ethereum or a Near or a Solana because the mechanism by which you needed to bootstrap the trust, which wasn't, you started with a bunch of scarcity, which eventually ended up not being a constraint anymore and becoming abundant. But that period of scarcity is where you created the trust. And then the window is kind of closed. But yeah, it's sort of an interesting question of like, as some of these things move from being scarce to being extremely abundant, like what does that mean from a value capture and creation perspective?
So I'm going to circle back to some of the things that you started off the podcast with, which is we were
Sure.
talking about the different proof of and how do they translate
Mm,
into scarcity. Sort of looking forward, your crystal ball,
yeah.
so to speak. Sort of. I mean, we talked about proof of time space. What, where do you see the scarcity really taking root? I mean, I guess beyond trust, because trust is obviously a critical component. So we'll put that one. We got that one. But
Yeah.
outside of something like more trust and reputation based, and potentially block space based, what I'm just going to probe a little bit to see if there's other
Yeah.
areas that you think about when you think of like how
Yeah.
scarcity, because nobody could have predicted, proof of work and the scarcity that it would have driven,
Yeah.
20 years ago. Um, so I guess 5 years I'll give you. So
Yeah. It's a good question. I can't,
75% easier.
yeah, yeah, that's funny. The short answer is I don't know. Longer answer is it's a really interesting prompt to think about, and maybe a good follow-up for me that you prompted out of this conversation is maybe it's a really good question because I think understanding like the dimensions of scarcity beyond trust um, really do start to hint at where will there be tremendous value capture. I mean, I think attention is one. Attention is always a scarce
Yeah.
resource, right? And so like the ability to have user attention and monetize that. Um, I think, share of wallet in some sense, like, the amount of money that people have and budget that they have is a zero sum scarce resource. There's only so many dollars there. And so you're sort of like fighting for wallet share. In some sense, just sort of thinking out loud here, it seems almost like if you can, like one way you might be able to generate all the sources of trust is to look at what the business models of the world are and then work from that to say like, if there are sustainable businesses, they're actually capturing some value, and the reason they're capturing some value is they're offering some scarce good or service, and you could categorize those. And reputation is certainly one, attention is certainly one, you know, and those are the two of the biggest businesses on the internet basically. It's like monetizing trust and monetizing attention. But it's a really good question. I have to think about it. There's probably some really good forward thinking like VC blog post fodder in there.
Yeah. And probably simplicity is pretty scarce.
Yeah. Yeah.
So at any rate, I would love to follow up because
Yeah, I'll think about it. I think it's an interesting prompt. I'll think about it. This last question is a really interesting one. Yeah, because both forwards and backwards, right? It's like, what are the business models in the world, and what do they imply about what is ultimately scarce? And then from a technology perspective, what are the things that are scarce and therefore imply that there might actually be some sort of business model? And if you kind of want to go in both directions, and if you can do both, you might actually discover effectively a new business model, right? Like the realization at some point in the last couple of years that block space as a scarce resource produces a new form of business model is like a great insight. Or ultimately, that trust at the L1 and people are willing to pay a trust premium, which, in like monetary terms, people sometimes call like a monetary premium, which I just think of like from a technology perspective, I think of that as a trust premium above like the core utility of an asset. Yield some really good sort of value capture insights. So it's a really good prompt. Definitely worth thinking about.
And I also think like, simplicity, it's a proxy for something more. Simplicity and reputation. So there's a
Yeah.
lot of data. There's a ton of data.
Yeah.
What there's scarcity of is the ability to assimilate it in a way that's sort of unique to a
Yeah.
user. That's
Yeah.
scarce. That's very
Yeah.
difficult to find. You might find little pieces of it, but you certainly don't find something that's really uniquely built around you. Now, there's certain AI tools that prompt and feed you things, but that killer app, that thing that just draws people to it, hasn't really emerged. It's still very
Yeah.
experimental. AI
Yeah.
might be something that facilitates it. An AI framework that actually makes the ability to sort of navigate digital asset space, navigate all the data on a user basis, on an enterprise basis, in a way that's, I mean, there's certainly large institutions that are leveraging this technology today for their
Yeah.
own specific purposes. What's scarce is how to really empower, smaller users.
Yeah. Yeah, there's lots of good fodder there. Lots of good food for thought. I'm gonna chew on some of that.
Excellent. Well, thanks so much for coming on the podcast.
Eric,
I'm
it's great to see
glad.
you.
I'm glad
Thank
that
you
I
for the
finally
time.
got you. It only took me
Yeah,
like
I'm glad we
how
were
many
able to do
months,
it.
how many
Well,
years?
yeah. It took like a year. I'm glad we were able to do it. That's
Excellent.
funny.
So glad we did it. All right, you take care.
All right, man. Well, great to see you.
Bye
Thank you
bye.
for the time.